Checkpoints is presented by pharmaceutical company GM Pharma.
Mr. Weiler, hi. Thank you very much for the opportunity. I know that you travel quite a lot to Georgia, but it's the first time for Business Media Georgia that we have the opportunity to talk to JPMorgan, the biggest bank in the world, representative. So thank you very much for this opportunity.
It's a pleasure. Pleasure to be in Tbilisi. Pleasure to talk to you.
Mr. Weiler, we are here for the conference, International Capital Market Conference organized by TBC Capital. First of all, let me ask you about the event. Do you think that such events play a big role in developing the local capital market ecosystem? And if yes, how particularly?
Okay. Yeah, no, I think it's a great facilitator, to helping to achieve an objective, and the objective is to develop the local capital markets. I think TBC has done an outstanding job in pulling together all the relevant partners, whether these are prospective, existing issuers, government official, banks like us, local participants. And so I think it's a great forum to exchange views, exchange ideas, and hopefully make progress towards creating a better platform that will allow local markets to develop further. It's of great interest to local participants to have a deeper local market, and deeper local market typically also means better economic growth as financing becomes more available. Also means less risk, right, for the borrowers as they can match their cash flows. And so I think it's very timely and a great initiative, and I hope it becomes an annual event.
Let's discuss the local market, which there was a boom in recent years in terms of obligations and bonds, which definitely is a good sign for the country as big companies, corporations are issuing more and more bonds. Could you evaluate what is happening in Georgia and then put it into the regional perspective as well in terms of capital market development?
Yeah, we've seen definitely a strong uptick in local issuances. We at JPMorgan are not directly involved in those. Our value add is more connecting local borrowers with international investors. But we have a number of conversations also with local borrowers about local currency denominated international bonds. So this is for borrowers that may require a bigger capacity than what is available in the local market. I know that there have been many reforms undertaken to make the local market more attractive and maybe create almost like a financial hub within the region. I think that's the objective from the government officials as well as the National Bank. I think there's more to do. One potential catalyst that could be on the horizon is the pension funds participation or more prominent participation in the local market. I know that they have quite significant assets under management. I understand about $4.5 billion, but their participation so far in the local fixed income market has been quite limited. When we look at other markets or jurisdictions in the kind of broader region in Central Europe, you see that pension fund reform often is a catalyst for local market development. So I think there's an opportunity that the local pension fund can play. But there are also some other features that could be implemented to make the market more attractive, both for local and international investors, because a liquid local market also means you have international investor participation.
What are the trends that you see in Georgia that could, based on your vast experience in different markets, could be catalysts for the growth of the local capital market, except for the pension fund?
Another catalyst would be to make it easier for international investors to access the domestic market. I understand currently a local bank account, for example, is required in order to participate in the domestic market. So that is somewhat of a hindrance. It's not a hindrance that can be, that cannot be overcome. But international investors will compare that access to other markets they're interested in and active in. And so I think that may be another one where the authorities can simplify access for international investors.
I'd like to return to your point about Georgia becoming possibly the regional hub. First of all, let me ask you about the context, in the context of neighboring countries, the countries within the region. Is Georgia ahead of them in terms of that capital market? And if yes, does our country really have the opportunity to transform into a sort of regional hub?
Mm-hmm. I'll answer the question more on the international capital market side, because this is where we have expertise and more knowledge. I think there's two ways of answering your question. One is, if you look at the overall outstanding debt stock of Georgia internationally versus peers in the region, it's very low. It's only 1.85 billion at the moment. Only Moldova and Tajikistan are lower. If you exclude the government or sovereign financings from it, and you take into account the relative size of the economy in Georgia, then the conclusion actually is that Georgian companies and banks are utilizing international markets more than peers in the region. So it's a relative comment, right? Because scale for international market is very important, right? So, a market such as Georgia, you have a GDP of approximately 30 billion now. There is a limited number of issuers that have the necessary scale, right, to issue $300, $500 million or euro type transactions. Whereas if you look at markets like, pre-war in Russia or Ukraine, much bigger economies, and therefore there's a lot more borrowers that have the scale to access the market, which they did. But on a relative basis to the size of the economy, Georgia has actually done really well.
What are the risks that you see in Georgia in terms of developing financial infrastructure, financial capital markets?
Look, I think investors will look at, one is the scale. It's a small market. You've had, in the history of international issuance, there have only been 8 borrowers from Georgia. So it's a small market, and investors will have to commit resources to follow it. And so that's one aspect. The other aspect is that, to my earlier point, issuances will be small, which means they're also illiquid. And for some investors, liquidity is very important. I'd say probably for many investors, liquidity is very important, and that's a hindrance, right, in order to get more participation from accounts around the world. And then I think thirdly, you are in a geopolitical hot zone, if I can call it that, right? So, and there's been precedents in other countries, but also in Georgia itself, right, in 2008, where geopolitics changed the risk profile suddenly, right? And so that's always something that investors have to consider and to be comfortable with.
Let me ask you this. Given everything that you mentioned, obviously Georgia is a small country with a small economy, and the scale at which capital market can be developed is also limited. Based on everything that, what could Georgia do in terms of creating its own niche? Obviously the scale cannot be as big as other countries, but what could be the alley, the niche that Georgia could develop so that it somehow, the capital markets that we have inside then drive the growth of the economy?
I think Georgia has actually already kind of developed its niche amongst international investors, and it really started with the government all the way back to 2007 when we did the first sovereign bond. And investors very much related to the open market, policies in Georgia. They're very much related to the transparency, the proactivity in sharing information, engaging with investors, to building relationships, participating in conferences, having investor relations. And so Georgia is regarded as a very transparent and open market, especially relative to regional peers, right? So I would say that Georgia enjoys an elevated status amongst investors, and elevated status in terms of trust, and that's very important, right? So you need to have that. I think the major hindrance of more issuance is really scale, and that takes time, right? So it's really about time and preparing new borrowers and preparing borrowers that become large enough for international issuances to implement similar policies that peers in the past have done, and follow solid corporate governance, which is also very important.
I'd like to ask you the last question, which is about the European integration. Georgia is heading towards EU integration. Obviously, this will not happen in the very near future, but it is the trajectory that our country has. In your opinion, how will this affect Georgia's capital markets in general, in terms of acceptance of the European regulation, which is already happening but will happen even more in the future, and in general, the trajectory that Georgia has towards the EU, how will it help develop the local capital markets and in general the economy?
Yeah, no, the candidacy is very market friendly. If the government continues to pursue the EU accession, which based on population polls seems highly likely, I read that 90% of the population support an accession to the EU, so the government should be motivated to implement the necessary reforms to achieve that goal. If you look at other Central European countries who've gone through the same process, it takes a few years typically, right, to go through and implement the reforms. Probably 6-7 years. Croatia, I think it took 8 years, but on average maybe 6 years. So I think there's a reasonable objective, or let's say likelihood, for Georgia to see an EU accession as maybe 2030. I mean, I think it would be a reasonable goal. If that happens and all these reforms are implemented and there's a consolidation with European institutions, it should have a positive impact on ratings. And so, from my personal perspective, I wouldn't see it unlikely that Georgia would migrate towards and probably into investment grade, right? From where it currently stands. That means funding costs will be lower. That means you have a broader investor base that can invest, and that altogether means funding costs should be lower. Yeah, which hopefully would also mean that you can spur growth, and with growth comes scale, and you have more borrowers.
Mr. Weiler, thank you very much for the interview. Let's hope that the next time we talk, the issuance, the total bonds that the companies and the government have issued has increased, and maybe we have made additional steps towards EU integration as well. Thank you very much.
Thank you very much. Thanks for talking to me.
The Checkpoints is presented by pharmaceutical company GM Pharma.